Today I'm talking to Aaron Katsman. Aaron is a licensed financial advisor. Aaron, what qualifications do you have to be a licensed financial advisor?
Well, first, Jonathan, I'd like to thank you very much for having me this afternoon. It's a real pleasure to be on with you. I'm a licensed financial advisor both in the United States and in Israel. I'm also a financial columnist for the Jerusalem Post, and I'm a regular contributor for the leading financial website in the United States called seekingalpha.com.
Okay, great. Tell us, what are individual stocks and what are funds?
That's a great question. I think there's, especially for beginning investors, there's a lot of confusion in trying to understand what the differences are. An individual stock is, a company like Coca-Cola, Google, Microsoft. When you say, when somebody talks about buying stocks, that's what they're talking about, buying shares in a particular company, which then turns you, depending how much you have, but probably not very much, into some kind of an owner in the company, and you're sharing in the profits of the company. A fund, on the other hand, is either a managed or an unmanaged pool or basket of individual securities. So instead of owning directly Coca-Cola or Microsoft, you own a fund, and that fund then owns part of, 100, 200, even 300 different companies.
Okay, so what is the difference between investing in the individual stocks and the funds?
Okay, so, a lot of investors, they go to the water cooler, they talk with their friends in the locker room or whatever, and, I made a killing in Apple stock. Or, I was on the IPO 25 years ago or 30 years ago of Microsoft, I made millions. Those are people who are, who are investing in individual securities, oftentimes with the hope of hitting a home run. When you invest in individual securities, there's you can get a lot more bang for your buck. Conversely, you can lose a lot more money. For smaller investors, it could be a lot more volatile to invest in a few individual stocks because you can't own enough to have a sort of a broad-based diversification. For larger investors with, hundreds of thousands of dollars, they are able to do it. But certainly for smaller investors, a little more risky. Funds, on the other hand, do it for you. They own, 100 stocks, 200 stocks, so you're able to sort of accomplish the well-rounded global diversification that you're looking for. And on the one hand, you don't have to worry about actually buying and selling and following each individual share because somebody's doing it for you. And you don't have to worry about, is this a little bit too risky because I only own 3 companies, because they own, hundreds of companies for you. You're part owner in hundreds of companies. So that's a big advantage, in terms of sort of smoothing out the ride, in terms of being a little bit more diverse in your holdings, using funds. On the other hand, there will be people who say, well, fund managers over time statistically don't tend to perform all that well. They charge really, really high fees, which is not great over time for the customers. Basically, that means you're throwing away a lot of money over 10 or 15 years in management fees, and you might not be getting a lot of value for that. So if you have the ability to sort of create a diverse portfolio with individual securities, and you have the patience sort of and the know-how to sit and follow them to make sure that what you're holding is actually still a good investment, then there's a lot of value that can be added by owning individual securities. So there's no clear-cut, winner between the two. It really depends on the individual's goals, his needs, how much risk you want to take, and how much money you have to invest.
Great. So it's a lot to think about there, and you're saying that for one person, it might be an advantage to take individual stocks, and for other people who are perhaps more conservative, it might be better for them to go for the
Yeah,
funds.
for sure. And smaller investors, funds work fine. There are a lot of variations of funds out there now. They're low feed index funds and what are called exchange traded funds, which give you that same sort of broad-based diversification, but with much lower fees. So that's great. On the other hand, for those who can stomach it, for those who might want more bang for their buck, there's a lot to be said for individual stock investing as well. That's one of the reasons I think people like to use advisors as opposed to doing it themselves, because the advisor can help coach them. What is the best alternative? What is the best asset for the investor to go into, to invest in, based on their risk profile and their ultimate profile of what their goals are and what their needs are when they start investing.
Great. Aaron Katsman.
Thanks a lot for having me. Have a great day.